The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Welcome back. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the weekly templates, the front side, the back side, and identifying potential parabolic trade setup opportunities based on how the template evolves. For a quick review, we'll just talk about Monday, day one, the opening range. Often that establishes the new high-low heading into the week. Day two, Tuesday, on the front side of the week, typically expands the range, and we can target parabolic, coiled, explosive range expansion opportunities. And in some cases, we can target range reversal opportunities, markets that break out, coil sideways for reversals. And Wednesday, reset day, we can have parabolic range expansions again on day 3, or we can also have signal days, a reset day, a market that reverses, coils, or is a narrow range day heading into the backside of the week, where they potentially can flip the book per se. The backside, Thursday, day 2, can also offer parabolic coiled reversal type opportunities, whether they're for continuation trades or for range reversal opportunities, high of week, low of week type of trade setups, which we'll have a look at today. And Friday, of course, day 3, the closing range, we can have parabolic trend trade opportunities, parabolic reversal trade opportunities. Which instrument is set up the best on the day in the session that you're trading? How can we identify those? We talked about using our watch list, building our watch list last week. What type of weekly template am I in? What instruments are set up in the session that I'm trading? And which candidate behaves the best heading into the timing window for a parabolic explosive trade opportunity? And as Bill Lipschutz says, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Meaning, not necessarily trying to catch a move every day or get a trade every day, but which trade setups offer us the 90-10 or 99 parabolic trade opportunity in the session that we're trading. Now in the playbook, we talk about the opening range and initial balance, the basic model for trade entry criteria, keeping it as simple as possible to remove the analysis paralysis. When a new week starts, we can be looking for 3 session setups or a 3-day template, as we spoke about in the watch list builder last week. We'll continue to build on this, but today just targeting a couple of basic ideas on a Monday. Markets that break out, markets that have broken out on the day. So perhaps we're trading the U.S. session. We have markets that may have broken out in Asia or broken out in the London session. Markets that have potentially closed in breakout on a Friday. They've broken outside of Thursday's range and closed in breakout, or even a week itself that is closed in breakout. Successive closes in breakout, a market that's trending. We want to make sure we're not getting in front of a strongly trending market. That instrument may not be the right candidate on the day. We may have a signal day. We could have an inside day, an outside day, a first red day or a first green day on a Friday for a 3-day setup. Now we can also look at markets that have made higher highs or lower lows on the day that again have potentially broken out or already broken out in previous sessions if we're trading the US, and they may have broken out in Asia or in the London session. Now if you're trading currencies, one of the ways that I can sometimes look to screen out pairs is major currency pairs on TradingView. They have a TradingView screener, Forex screener, which is a free instrument to use, And that just allows me to have a quick look to see which instruments have already had a fairly large move, if not, if not, whether they have or not. So just looking at the major currency pairs, we can see the high-low for the day. And in this particular case, the New Zealand dollar has had the largest negative move, and it's moved 33 pips on the day, and then from there progressively dropping down. At the largest movement thus far, the smallest degree of changes on the Canadian dollar. We can also bring up minor cross rate pairs with this also, just to run the screen to see if any other pairs have had large moves. Now, some of these pairs are reversed as to what you may have on your screen, but I can filter through to take a quick look. We can see the pound New Zealand's had the largest movement. Euro New Zealand just following, but again, a fairly narrow range as we start our Monday. This is just the currency instrument. So again, this is on TradingView and Forex Screener, a free instrument to identify instruments that have already potentially had moves. And as the week evolves, we can change that to the week from the original Friday's closing price as the week evolves. And most importantly, I'm looking for opportunities as the week evolves based on Friday's closing price. The market will establish a new high-low on a Monday, the opening range of the new week. Tuesday, day 2, typically will expand the range, so we can look for parabolic coils on the front side of the week for range expansions. But every trader has these 3 levels when they come to the screen each and every day. And as Paul Tudor Jones says, always think of your entry point as last night's close. Above these levels, below these levels, we have other time frame traders. So as the range expands, we can use closing price to identify first red day, first green day opportunities. Inside days, these are the trigger signal days, days that can help us identify a potential candidate for either a reversal or trend trade. First red day, page 58 in the playbook. First green day, page 64. Inside days for false break or trend trade opportunities. And of course, a day 0 setup, which is usually a 3-day template, an outside high-low, peak formation high, peak formation low, and a market that coils sideways for an explosive range expansion opportunity. Classical charting, a larger time frame rectangle that builds over 3 to 4 days. There are only 2 types of templates I'll be hunting on the day, and that is a pump and dump template. An example of this on Tuesday on the Russell 2000. Market pumped up, closed in breakout on Monday, the opening range, coiled sideways before breaking down and giving the collapse in the U.S. session, the Russell 2000. An example of this on Tuesday on Bitcoin, a market that exploded in the Asian session, coiled sideways for the parabolic reversal in the U.S. window. 2 examples of pump and dump that showed up last week on Tuesday, day 2. And the other type of template will be a dump and pump, the exact opposite. A market that dumps down, coils sideways for the explosive parabolic continuation trade. We saw an example of this on the yen crosspairs, but specifically the euro yen in the US window for a parabolic reversal trade, a market that broke out in the Asian and London windows and coiled down low for the explosive reversal, the dump and pump template on Monday, day 1. We also saw the dump and pump template with the euro heading into major red news on Friday, again noticing the levels, high of week, low of day, and closing price for the coil and the explosive parabolic trend continuation trade, the dump and pump template on Friday. We saw 3 days of breakout traders in the markets on the indexes on Thursday, on the S&P and the NASDAQ for a parabolic collapse, an ACB opportunity all the way to the close of the day. The trigger day signal, again, 3 days of longs or 3 days of shorts, page 51 in the playbook for the high of week to low of day, all in ACB trade setup opportunity on Thursday on the NASDAQ and the S&P. So as we start a new week, I want to reinforce the importance of being patient and sitting on your hands. And as Bill Lipschutz says, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. 2 to 3 parabolic coiled markets can significantly compound your account. Trying to catch moves every day is not the same as identifying a specific trade setup opportunity on any instrument. So having a basket that reflects some major currency pairs, some energies, some metals, and the indexes gives us a broader perspective to help identify just one candidate 2 to 3 times a week for an explosive parabolic coil, an ACV opportunity, markets that are not coming back, which means they're scalable and they're reproducible, and they show up again and again and again. So for myself, trading the US window, this is a basic instrument basket right here. The US yen, the euro, the Canadian dollar, and Bitcoin. In metals, I can have gold and silver, West Texas oil and natural gas for my energies, and the indexes, the 4 major US indexes. That's enough instruments to just look for one opportunity, whether it's a nail and bail on the front side of the week, a parabolic range expansion, or reversal on day 2. Perhaps we'll have a signal day, a first red day, first green day on Wednesday. Or we can have 3 days of breakout traders in the markets for an all-in opportunity on Thursday or heading into Free Cash Friday. But this is a basic primary watch list basket of instruments. If you're trading Asia, you may have some more Asian cross pairs. If you're trading the London session, well, obviously you'll have pairs that may reflect opportunities that can show up in the London session, the pound crosses, the euro crosses, perhaps a few Swiss or yen cross pairs. But that gives us a simple basket to help target parabolic trade setups. And as we start our new week, I encourage everybody to just have the patience to sit on your hands and wait. 1 or 2 of these opportunities can significantly compound your account. Another example is the Japanese yen on Friday. Again, our 3 levels are high of day, low of day, and closing price heading into Free Cash Friday. A parabolic trend continuation trade as we saw similar on the euro. An example of a Monday opening range, a day 1 runner, S&P, Dow Jones, the NASDAQ markets that made range expansions earlier in the day, peak formation low on Friday. Heading into our new day 1, we enter into our 3rd hour, the 10 a.m. hour, for the range expansion on day 1, the opening range opportunity. So as we start our new week, I encourage traders to be patient, to be willing to sit on their hands and wait for hunting out the best opportunities, the parabolic opportunities, the ones that can significantly scale your trading account in size. Rinse and repeat, scale them up in size. Different from catching moves, grabbing pips, identify specific setups that show up again and again and again. And if you don't see those setups, be willing to walk away until your setup presents and then execute flawlessly, lock in the money, and get off the screen. Keep it simple, traders. We'll expand upon this. We're going to be working on building our watch list as well as specific parabolic coiled markets. 2 very specific trade opportunities that show up almost every single week, and we'll be identifying those specifically to help compound your trading accounts. Have a great day, traders, and may the markets go with you.